Welcome to Bite-Sized Business, the channel where we use financial metrics and ratios to gauge the financial health of companies. In today's video, we will continue the Defense Contractors series and take a bite into Boeing. Boeing is an American aerospace company founded in Seattle, Washington in 1916 and now headed in Virginia. Boeing started as both a transport and manufacturing company for airplanes and aerospace products. And through the 1920s, the company acquired many regional airlines and manufacturers, the most prominent acquisition being Pratt & Whitney. But in 1934, following an antitrust regulation, the company would be required to split the segments, leading to the company to spin off its airlines unit into United Airlines. Boeing's history slows through the late 1900s until the 1990s, where they would merge with McDonnell Douglas and acquire the satellite division from Hughes Electronics. Boeing is the only company we've reviewed in this series that does both military and consumer in mass scale, but 56% of their revenue does come from defense. While Boeing hasn't gotten many contracts for aircrafts recently with the Department of Defense, they have been doing well with aircraft bombs, missiles, and ground defense systems. Looking at Boeing's most recent financial reports, we can see that in the last 12 months, the company has done $73.3 billion of revenue. They did EBITDA of negative $3.75 billion and net income of negative $8 billion. Looking at the balance sheet and sorting through their most recent quarterly report, we can see total assets came in at $137.7 billion, liabilities at $161.26 billion. That includes a total debt load of $57.65 billion, leaving us with a shareholder equity of negative $23.56 billion. Looking at the cash flow statement, we can see in the last 12 months they've done operating cash flow of negative $5.25 billion, leaving us with free cash flow of negative $7.35 billion. We can see that this has been a consistent theme since 2020, where they have been consistently losing money on their free cash flow, going from around negative $20 billion during the peak of COVID to negative 4.4, stabilizing a little to a positive 2.3, positive 4.3, but then dropping back to the negatives. This is also reflected on the income statement, as if we look, revenue in 2020 hit a low at $58 billion, and it has come back pretty strong since then. But if we look at their net income, we can see it has been negative since 2020. And even looking at EBITDA, they've only had 1 year of positive EBITDA during that time. If we jump into the main course and review some of the information off of those financial statements, we get the Excel sheet. And so today's company was Boeing, who trades under the ticker symbol BA. They are also in the defense industry and primarily in aerospace technology. The company did $73.3 billion in revenue in the last 12 months, which is a little above Lockheed, where they've sat a little above them in revenue for the last 3 years. EBITDA has been consistently negative over that time, aside from 2023, but overall they have done negative EBITDA over the last 3 years. The same goes for net income. We see a loss of $8 billion, a loss of $2 billion, and a loss of $5 billion. And so the company is losing a lot of money. That's around $15 billion that they've lost in the last 3 years. Looking at total debt, we see it's much higher than the other companies, sitting at $57.6 billion, leaving them to have liabilities of $161.2 billion, which is greater than their assets, leaving us with a negative shareholder equity of $23.5 billion. The picture doesn't get much better if we look at free cash flow. It had stabilized a little in 2022, coming in at around $2.3 billion, done a little better in 2023 at $4.4 billion, but then it completely fell off in the last 12 months, coming in at $7.35 billion in negative free cash flow. The company hasn't done any buybacks or paid a dividend in the last 3 years due to the fact that they have not been a profitable company over this time. If we look at the ratios, we can see they have a negative debt to equity, which is not good, a negative debt to EBITDA, which is also not good, an EBITDA margin of negative 5%, and a net profit margin of negative 11%. The company hasn't done any buybacks, and so we have zero for both of those. The only bright side is their revenue compound annual growth rate has been 5%. But if we look at their EBITDA calculator, or CAGR, and the free cash flow CAGR, we see they're so bad it broke my formula. And because they ended up going from a negative, well, from a positive EBITDA to a negative EBITDA, and because their free cash flow was already negative, it completely broke my formula, and I was getting NA for both. And that's not a good sign. The company is doing so bad, it broke my Excel formulas. If we look at the comparisons, we see they have a negative debt to equity, they have a negative debt to EBITDA, a low net profit or low EBITDA margin, which really was negative 5%, and they have a negative net profit margin. And so that is going to leave us with the first company in this channel to get a red light. Boeing, by all means, should be bankrupt at this point. If they were in any other industry than defense, they would have gone bankrupt in 2020. The only reason that this company is still around right now is because of the Department of Defense, and it's just not sustainable. A company cannot lose as much money as Boeing is losing and actually survive. And so while they may make it out of this with a lot of government help, this is not a financially sound company, and they're going to get a red light, because by no means would I recommend anyone invest in this company, because it is on a path to bankruptcy that is only going to be avoided likely by a government bailout at this point. But every dollar of revenue they do, they're losing 5 cents in EBITDA and 11 cents in profit, and that is not sustainable in any market or any industry. And so I am giving them a red light, because they should be bankrupt, and they're only not bankrupt because they do defense business. Looking at capital distributions, it gets even worse. The company has not distributed a dollar back to shareholders in the last 3 years, and I think if I looked back, they probably haven't since 2020. And so it is not doing very well. We see they have zeros here, and I will pull up their shares outstanding chart, because it gets even worse. Looking at Boeing's shares outstanding history, it starts with a great picture. Throughout the early 2000s and mid 2010s, the company was doing great. Obviously, they struggled a little after the 2008 financial crisis, and so shares did rise, and that was a common theme with a lot of companies that I've reviewed. But if we look throughout the 2010s, they were very strong when it came to stock buybacks. They actually bought back, from 770 million shares down to around 565, 570 million shares. And so they bought back 200 million shares of stock throughout the 2010s, and were doing pretty well, all things considered, up until COVID. And then we can see from COVID, they've gone from that, low of 565 million shares back up to over 600 million shares. And so the company is having to release stock to try and hold on. And that, again, is not sustainable, because if you are devaluing the stake a shareholder has in the company, they have no incentive to keep money there. And so that is not a good thing. And it just shows, again, in that Boeing is in such a bad financial position. The story gets even worse, however, if you look at Boeing from just as a company and not even as a financial entity, because Boeing has had an awful 2024 with a large number of mechanical issues and crashes that have sadly killed a lot of people who were in Boeing planes. And while we don't know if it is a manufacturing issue or if it's a service issue or even if it is an issue with Boeing itself. But the one consistency is the Boeing 737-800 has been doing poorly in 2024. Most recently, just the other day, there was a crash in South Korea. Um, you know, Boeing was the company behind the space system that has trapped astronauts in space or trapped them for a few extra weeks or a few extra months. Um, and even this CNN article is saying Boeing's terrible year ending with the worst aviation tragedy of 2024. The things we can't forget is that while Boeing is a defense company and over half of their revenue does come from defense, 44% that doesn't come from defense is coming from the sale of things like the Boeing 737-800, things that millions of people fly on every day, and a plane that I would assume some of the people watching this video have flown either within the last year or especially around the holidays within the last month or two. And so the fact that the company cannot produce a product right now that can actually safely get people to their destination every time is a really bad look for the company, and it is just showing another reason why Boeing got that red light, because they aren't doing well financially, they aren't doing well when it comes to a production standpoint, and they're in hot water because their products are actively killing people, and it's not the products that are designed to kill people that are killing people. It is the products that are made to safely get people from point A to point B. And so Boeing is in for some trouble in the near future. I hope you enjoyed this video on Boeing. If you did, feel free to like or subscribe, and feel free to comment below if you have any other companies or industries you want me to look into. Thanks for watching.